On Wednesday, the price of Bitcoin dropped below $34,000, £24,030 for the first time in 3 months as China imposed new cryptocurrency restrictions. Beijing has made it illegal for banks and payment companies to provide services linked to cryptocurrency transactions. On Tuesday, it also issued a warning to investors about speculative crypto trading. In today's video, we're going to delve into why China is cracking down on cryptocurrency, Bitcoin in particular, along with how this will affect the price. But before we get into the video, don't forget to leave a like and subscribe to the channel with notifications on so you don't miss out on any of the new videos we post. News about the crackdown on cryptocurrency in China and how it will affect the price. Cryptocurrency prices have plummeted as China's crackdown becomes more severe. According to a report in the Chinese state-run Global Times, China's been tightening its regulatory grip on cryptocurrencies for some time, but it now appears that over 90% of Bitcoin mining power in the nation will be shut down. Authorities in Sichuan, China's southwestern province, ordered crypto miners to stop operations on Friday. China's central bank stated yesterday that banks would be ordered to crack down on cryptocurrency trading. Cryptocurrencies, which are decentralized and unregulated, are seen as a danger by China. They've disrupted the normal order of the economy and raised the dangers of illicit cross-border transfers of assets and illegal activities such as money laundering, according to the country's central bank. It intends to be the first country to issue its own official digital currency, the e-yuan. Because of China's crackdown, Bitcoin mining will continue. Instead, operators will relocate to another location. Because of its comparatively permissive regulatory environment and cheap electricity, Texas has been hailed as a place that could gain from China's new limits. To combat money laundering, China's made cryptocurrency trading illegal since 2019. However, people can still trade in digital currencies like Bitcoin, which has alarmed Beijing. 3 government-backed organizations, including China's National Internet Finance Association, China Banking Association, and China Payment and Clearing Association, issued a social media warning on Tuesday. They claimed that if consumers suffered losses as a result of cryptocurrency investment transaction, they would be unprotected. They went on to say that recent large fluctuations in cryptocurrency prices seriously breach people's asset safety and disturb the regular economic and financial system. Bitcoin has plummeted after its rise in 2020 and early 2021. Elon Musk, the CEO of Tesla, suddenly revealed in March that the electric car maker will allow consumers to purchase automobiles using Bitcoin. But because of environmental concerns, he made a U-turn recently and banned Bitcoin car purchases. His concerns are focused on Bitcoin mining, an energy-intensive operation that uses high-powered computers to generate the digital money. It frequently uses electricity produced by fossil fuels, mainly coal. Musk stated, "We are concerned about the fast-rising use of fossil fuels for Bitcoin mining and transactions, particularly coal, which has the highest emissions of any fuel. Cryptocurrency is a great idea, but it's not going to happen." He stated that the electric car maker has no plans to sell any of its Bitcoin, and that the cryptocurrency transactions will resume once mining transitions to more environmentally friendly energy sources. Despite the fact that the digital currency cannot be exchanged in China, the country accounts for more than 75% of global Bitcoin mining. The events of recent weeks are a familiar story to anyone who has followed the cryptocurrency sector for a long time. Bitcoin reaches new highs as a result of some random incident, such as Elon Musk's tweet announcing Tesla's acceptance of cryptocurrency payments, and many begin to believe it is gaining mainstream acceptance. Illegal mining for Bitcoin issues in China. The regular spring rains bring significant changes to the Sichuan province in southwestern China. The uneven landscape is transformed into lush emerald by downpours. Rain also sends trucks loaded with computers to hydroelectric dams, where entrepreneurs can use cheap electricity to mine Bitcoin, an obscure process that involves solving equations with massive amounts of computational power. Due to its established technical supply chains and exceptionally inexpensive electricity, China houses over 75% of the world's Bitcoin mining capacity, or hash rate. Cryptocurrency mining necessitates massive quantities of computational power, making energy usage a significant cost. This means that during the summer, when the rains are bountiful, miners flock to Sichuan's hydropower plants, which have an excess of supply and are located in remote areas, making it difficult for them to connect to the national grid. Local governments frequently give power for pennies on the dollar, or even for free, in order to recruit jobs and enhance their gross domestic product. A number of cryptocurrency mining companies began suspending operations in China last week. Huobi, a cryptocurrency exchange, has discontinued miner hosting services as well as some trading services, while HashCow, which owns the world's largest mining farms, has announced that it would no longer sell machines to Chinese consumers. HashCow issued a statement saying, "We will aggressively support all kinds of rules and regulations in the country." Tang of Sichuan Duo Technology, on the other hand, has listed his mining machines for sale on the social media network WeChat. BTC's chief executive Zhang Zhuar, who controls over 18% of China's Bitcoin mining hash rate, has announced the suspension of his local operation. Environmental effects of mining cryptocurrencies in China. The rapid crackdown was largely motivated by cryptocurrency's inherent speculative nature and the Chinese Communist Party's CCP's severe aversion to risk or anything outside of its control. But to make matters worse, crypto mining has a huge environmental impact, undermining Chinese President Xi Jinping's lofty goal for making China carbon neutral by 2060. According to a study published in the scientific journal Nature Communications, Bitcoin mining in China was expected to generate more than 130 million metric tons of carbon emissions by 2024 before the crackdown. If the worldwide Bitcoin mining business were a country, it would be the world's 29th largest energy consumer, surpassing Argentina, which has a population of almost 45 million people. According to Tang, while most crypto mining activities in China are legal gray zones, some are downright unlawful. Subsidized power supplies intended for villagers to process goji berries as part of poverty alleviation initiatives in China's impoverished central province of Ningxia, for example, have been covertly siphoned off for Bitcoin mining, he claims. Bitcoin miners are essentially paid to act as auditors, ensuring the authenticity of transactions while allowing a steady stream of fresh units of the currency to enter the system. In April, the cryptocurrency mining sector brought in $1.7 billion. Although Bitcoin mining is digital rather than physical, it has some of the same features as gold, which is probably history's greatest successful medium of trade and remains a highly desired asset after thousands of years. I believe Bitcoin will eventually replace gold, Tang adds, citing Bitcoin's potential to retain or gain value despite macroeconomic turmoil. It resembles gold in a number of ways. Why Gen Z are flocking to non-traditional investments. On the other hand, Gen Z all over the globe are investing at a high rate in alternative methods such as Bitcoin and different cryptos. Rather than traditional investments, many Gen Z and young millennial investors, ranging from teenagers to those in their early 20s, are positive on cryptocurrency and the technology that surrounds it. Some people have put the majority of their savings into these kinds of investments. According to a new CNBC millionaire survey, nearly half of millennial millionaires had at least 25% of their wealth in cryptocurrency. More than a third of millennial millionaires hold at least half of their wealth in crypto, with about half of them owning NFTs. Young investors have also participated in recent meme stock rallies, in which retail investors purchase shares of stock that have been shorted by Wall Street hedge funds, such as GameStop and AMC Entertainment. The investors think that by forcing hedge funds to pay, they will be able to overcome what they perceive to be an inefficient system. The lack of trust in established investment institutions is the primary reason why young people are turning to alternative investments like cryptocurrency. They conduct their own research rather than relying on established organizations for information, such as financial advisors and law firms. Another reason influencing the younger generation's decision to invest in cryptocurrencies or meme stocks is their real enthusiasm for blockchain technology. This corresponds to their sense of alienation from traditional financial institutions. Some perceive the crypto space as a place where people may find a community, while others see it as a fun area. Different Gen Z and young millennial investors agree that these two criteria, trust and connection, have a significant impact on their investing decisions and future prospects. Despite the fact that these young investors use platforms like the Bitcoin circuit to make quick money by buying and selling, the majority of them plan to keep their cryptocurrencies as long-term investments. Many of these young investors seeking long-term investments in the crypto industry feel it is the future of finance and will never sell. It's for this reason that some people trust in crypto's long-term viability and application. Even though the high price makes owning Bitcoin appear unattainable, they highlight the option of purchasing fractional shares known as satoshis. Some young investors praised Bitcoin for making financial access and equality available to everyone, including those who are unbanked. Bitcoin appears to be one step forward in allowing people who are unable to use traditional methods to participate in such events. And there you have it. Everything you need to know about why China is cracking down hard on cryptocurrencies, specifically Bitcoin, and how these have impacted the price globally. If you enjoyed today's video, don't forget to like and subscribe so you never miss any of our new and upcoming content. Thanks so much for watching, and we'll see you next time.